Welcome to Mex Moves, the weekly podcast where Damian Fraser and I, Eduardo Garcia, break down the topics and headlines shaping Mexico's business and finance world. How are you today, Damian?
Very good. Thank you, Eduardo. And you?
Doing good. This week we have, as you know, a great lineup of interviews. First, we speak with Octavio Camarena, CEO of KIO, one of Mexico's leading IT infrastructure and digital services company, about the outlook for data centers and digital infrastructure investments, among other topics, obviously. We also talk with Fabrice Chamonix and Mauricio Giordano from the French investment firm Natixis, who share their views on Mexico as an investment opportunity. Damian and I will review the GAP Airport Group's purchase of CBX Group, the company that owns the passenger bridge linking Tijuana's airport, also operated by GAP, with the southern region of San Diego. Also this week, we'll talk about how Aeromexico managed against all odds to complete its IPO. We'll take a closer look at that, along with Mexico's declining investment picture, which is to say the least worrisome. And finally, we'll discuss the U.S.-Mexico Chamber of Commerce's recommendations to boost investment here in Mexico ahead of the negotiations of the USMCA, the free trade agreement between Mexico, the U.S., and Canada. So, Damian, why don't you start by telling us about the GAP acquisition of CBX Group?
Sure, Eduardo. So as you may have seen, GAP, the Pacific Airport Group, two largest airports are Tijuana's and Guadalajara's, made a big announcement this week. First, they are acquiring the Cross-Border Express, known as CBX. That's the passenger bridge terminal that lets you walk from Tijuana to San Diego and back again. And so as a result of that, it will be consolidated into GAP. And secondly, they are internalizing the technical fee that they were paying outside group for helping manage the airports. That technical fee was 5% of EBITDA. So that will be saved, although obviously there will be some additional costs for having to internally do it. Now, both these transactions are related party transactions. In other words, the Cross-Border Express was owned by the Mexican controlling shareholders of GAP, Laura Diaz-Barroso and others. So investors obviously focused on how fair the deal is to avoid any appearance of a conflict of interest. And likewise, the TEA internalization, that fee was going both to the Mexican controlling investors and to the foreign partner. And in return for these, for buying CBX and internalizing the TAA fare, the controlling shareholders' stake in GAP is going to go from about 19% to 31.5%. So basically, GAP is going to be issuing new shares. Shareholders are going to be diluted, except for the controlling shareholders who are participating in this deal. But EBITDA will go up as they get the cash flow from CBX, and they benefit from internalizing the technical fee. I think from a kind of conceptual point of view, Eduardo, it's a good idea. There's a lot of synergies between CBX and Tijuana. The CBX has clearly brought value to the Tijuana airport. It's broadened its appeal to the whole of Southern California that wants to go to Mexico. They can now just take a 10-minute walk, pay $20, which is, I think, the one-way ticket, and then many more flights from Tijuana to the rest of Mexico than there are from San Diego or other Southern Californian airports. And likewise, Tijuana brings value to CBX. And in fact, the current CEO of GAP Airports, Raul Revuelta, he used to run CBX, which kind of gives you a sense of how close the two entities have been working together. So I think it makes sense, and I think broadly speaking, Wall Street was supportive. And on the internalization, I think that it also helps and it's a trend with REITs in the US when these technical fees, which are always sort of suspect to begin with, to be frank. It's just basically a way of controlling how shareholders taking money out of the group now are done internally, and it is run like most other companies that don't pay technical fees to outside shareholders. So it normalizes it. It's a sweet deal, obviously, for the controlling shareholders that see their stake go from just under 20 to over 30%. So they're clearly happy with this and wouldn't have proposed it if they weren't, since they control both sides of the deal.
Yeah, it seems like a win-win for for the two companies and its shareholders. I mean, we don't have a price, and so the review on whether it was fair. I assume that it is aligned for the benefit of the controlling shareholders of GAP to benefit not from the price but from the synergies that the company brings to their airport in Tijuana more than anything else. So one hopes that they're thinking big picture long term rather than making a little bit of a buck on a transaction brings more value for the synergies that will bring to the airport in Tijuana. I've been to that airport. I haven't done the crossing on the bridge, but I've heard, and it has become a very convenient way of traveling to the U.S. Taking a flight from Mexico rather than to a U.S. destination.
That's right. And I guess there is a price in the sense that they're issuing, 90 million Class B shares. So we know the value of that. And that's what the controlling shareholders are getting for giving up CBX and their technical fee. And on the other side of the coin, the 5% of EBITDA is the savings from internalizing the technical fees. That's about 50 million a year. So there'll be an extra 50 million to GAP shareholders from internalizing that. And the CBX, I think last 12 months, it's about $150 million of revenues and $100 million of EBITDA. So that money will go to GAP in return for issuing those B shares. So it's a transaction that's fairly simple to calculate, and most people who've done the numbers saying that initially the cash flow per share might be slightly negative, but over time, and this should add value as you explore synergies, and there's some value at CBX, namely the real estate. They have, I think, 60 acres that they're going to develop that's not generating a lot of money today, but will be generating money, going forward.
Right. And so we also had some additional news on airlines, this time Aeromexico managing to go ahead with its IPO, which was a surprise, I suspect, but they were well received, it seems. Is that right?
Yeah, that's right. I mean, the deal, according to Bloomberg story, was 10 times oversubscribed. Usually that's a little bit of an exaggeration. Usually, hedge funds put in very big orders knowing that they're going to get scaled back. So, the real the real demand is usually lower than the stated demand. But the deal was priced at $19, which is the middle of the range, 18 to 20. And how did this sort of happen? I mean, it's quite a lot of headwinds. We've had the DOJ kind of block the code sharing or parts of the code sharing between Delta and Aeromexico. Then last week, we had the DOJ blocking 13 new or upcoming routes between the U.S. and Mexico, 2 of which I think were Aeromexico's. But perhaps more importantly, they were also putting limitations on carrying cargo in passenger planes, and that was sort of pure profit to Aeromexico. And then we had, just I think yesterday, Wednesday, because of the air traffic control issues related to the government shutdown in the U.S., they're cutting 10% of airline capacity in the U.S., including flights to Mexico. So we had quite a lot of challenges, let's say, for Aeromexico. But the basic, it is very, very cheap. I think there's 2 or 3 reasons why the deal was a success, and congratulations to Aeromexico and its banks, Barclays, Morgan Stanley, among others. But first, valuation was quite compelling. I think it was at 3.5 times EBITDA, and that's a big discount to the peers. The peers are Copa Airlines out of Panama and LATAM Airlines out of Chile, which are probably about 4.5 times. So it was coming at 1 turn below at LATAM and Copa, with some favorable dynamics in its favor. So basically, the market cap of Aeromexico is now about $3 billion. LATAM is a bigger airline, of course, $13 billion. But I think people are saying, well, maybe Aeromexico can revalue to something like LATAM and grow fast. So that's one key factor. The other is just how well Aeromexico has done since COVID. I think we talked about it a little bit last week, so I won't go over it all over again. But it's during COVID, when Apollo came in and gave it financing and took equity stake, it was able to reach new deals with its unions to make labor practices more flexible. It was also able to negotiate new terms on its leases of its aeroplanes. And as a result of that, their cost of available seat mile, excluding fuel, or KIO fuel, I think went, according to the prospectus, went from about 6.8 cents in 2019 to about 5.7 cents. So a huge efficiency gain that the airline is able to achieve, thanks to some of these changes that happened during COVID. So they really took advantage of COVID. And then secondly, prices have gone up as capacity became, more limited post-COVID, and that helped them, raise prices on certain key routes, and most notably Interjet, so left the Mexican market, and they have a younger and bit more efficient fleet, the sort of 737, 787 mix, and they got rid of their Embraers for the most part, at least. So that big operating turnaround meant that Aeromexico has been generating a lot of cash. Its margins are, pretty very, very good by global airline standards. And although it has fewer sort of passengers than Volaris, but I think Volaris is over 30 million last year, and Aeromexico was 25 million. Aeromexico generates much more revenue, so per passenger. So it's last year about 5.6 billion versus 3.2 at Volaris, and EBITDA, reflects that. So Volaris still, being an ultra low cost carrier, is a bit lower cost than Aeromexico, but they've closed the gap, which was huge. They have a bit of pricing power because they're more focused on the business segment, and they have, some sort of legacy profitable routes. And they obviously have had reasonably favorable slot treatment at Mexico City Airport, which is part of the issue that Mexico has with the DOT. So that's sort of roughly how things stand as I see it. But it's great for the stock market, Eduardo, that there's another IPO, and this is a real IPO in the sense that money's changing hands, because some of the other IPOs, like Next, the spin-off from Fibra Uno, was basically a non-cash, to a large extent, a non-cash transaction, in the sense that the authorities that did buy the stocks haven't been trading it. So there was money at stake, but it hasn't traded in any significant way. So this is first kind of reasonably liquid. I think about 80% was placed in the US, and my guess is that much of the demand is from airline funds, which kind of know the airline sector and trade one off against the other, and hedge funds that sort of looking in on the latest play. And both Copa and LATAM have had very strong years this year. So that probably also helped, despite the headwinds that we mentioned.
No, I think, like you said, Damian, it's a great story for the Mexican stock market finally getting a new name on its board. The company will get about $178 million, while the shareholders that unloaded some of the shares will get about 120, if I'm correct. It's a great transaction. It comes on the heels of all these headwinds you just pointed out. And I would just want to emphasize a little bit more on what's going on in America, because that's our key market for the Mexican airlines. And with this 10% capacity reduction in 40 major airports up in the United States, will impact Mexican travelers. As you know, around 95,000 Mexicans fly to the States every day. So that's 95,000. That's about 10,000 people that will be stranded because of this reduction of air capacity in America that the DOT has recommended due to the shutdown and the lack of air controllers, or the air controllers are working without payment, and so a few of them have requested leave of absence or some problems with employment. So it's a big thing for Mexico as well. Fewer people will come into this traveling season into the country unless this gets resolved fairly quickly. Aeromexico, United, Delta, American, Volaris, and Viva Aerobus will be the airlines most affected by this problematic this problem that the U.S. is facing with the shutdown. The airports that will suffer the greatest reduction in capacity will be Miami, Houston, L.A., Chicago, New York, JFK. So cities where Mexicans do travel to, and cities that bring in Americans to Mexican cities. So this is something not to forget, despite the great success of Aeromexico and its return to the Mexican stock exchange.
And that's right. I mean, the market, everyone I think assumes that the shutdown will be over, within weeks, at most months, right? So the market is kind of seeing through this particular impact, even though if you happen to be a traveler, especially ahead of during Thanksgiving, it's a big problem. I think maybe a bigger issue which came out during the IPO is the DOT putting a lot of pressure on the Mexican government to open up slots to American airlines, namely, I would guess, American and United, and because Delta and sort of Aeromexico kind of sing with one voice, and if you're going to give them slots to kind of keep AIFA Airport open to U.S. travel, then you might have to take some slots away from Aeromexico, which is quite dependent on Benito Juarez. So I don't know how that's going to unfold, but I guess the valuation discount at 3.5 times cash flow and the 18% or so operating margins, which are really good, help offset a lot of that uncertainty. And while I don't know, just finishing on airports and airlines, there was actually another story that came out this week, which is pretty interesting, which is ASUR, the Cancun airport, among 8 or so others on the Caribbean side of Mexico, has confirmed that it's bidding for the Motiva airport portfolio, which is a very big airport portfolio. It's 20 airports across LATAM, mostly in Brazil, 17 in Brazil, and then 3 between Ecuador, Costa Rica, and Curacao. And they have some very kind of iconic airports in Belo Horizonte, in San Jose, in Costa Rica, Quito, in Ecuador. And the newspapers, Bloomberg and Reuters, talking about $1 billion equity, another $900 million or so of debt, so a $2 billion enterprise value. And it's interesting. It's only about 10% of the equity value is only the $1 billion is only about 10% of ASUR's market cap, which is sort of around about $9 billion. But it is actually about 60% of ASUR's passenger level. So basically, ASUR is making a lot more money out of its passengers than the Motiva Airport Group is, and that's mainly because of favorable regulations, different zip code. Mexico's more profitable place, especially Cancun, much more non-regulated shopping revenues out of Cancun, I would guess, than Curacao or Quito. And but if they're successful, and the newspaper's saying they have the highest bid right now, they would try and apply their know-how to raise that revenue per passenger more to ASUR levels, and then you'd see big upside. And remember that ASUR also bought the shops in the U.S. airports in JFK and so on for about $300 million recently. So they've been on, and they also have the airports in Puerto Rico. So they're really diversifying out of Mexico, and that I think is because they have all this cash, they've got to do something with it, and also because Mexico is showing signs, especially Cancun Airport, which we've mentioned before, isn't doing especially well of slowing down. But of course, ASUR is controlled by Fernando Chico Pardo, the Mexican billionaire who bid for Banamex and had his bid accepted for 25% of Banamex. Some people thought that he would use ASUR as a cash cow to sort of pay further dividends. Already paid a lot of dividends to help finance the Banamex transaction, but he's keeping the two things very, very separate, which I think would be a relief to ASUR shareholders and allowing its cash flow to finance growth rather than help him pay for the acquisition of this bank.
Very impressive announcement. Like you said, they've acquired these shopping centers in airports in the U.S. And they know how to manage those. They've already expanded to Puerto Rico with 1 airport and 6 airports in Colombia. And now this transaction will give them a heavy footprint in Brazil, Quito and Curacao and Costa Rica. Another great move by Chico Pardo in his long-running growth as a businessman and expanding the companies that he has invested in. So kudos for him. It's not a done deal, but if they have the highest bid, it's likely that they will undertake this new company and becoming another Mexican transnational with operations in different countries around the world.
Now, one thing that may not make Fernando Chico too happy, Eduardo, is, as we talked about last week, the Mexican government has put up for consultation massive cuts in the so-called interchange fees that would pay the card issuers for debit cards and credit cards. So as we talked about, the reduction for debit will go from if it's approved, and it still has to be approved, and it may not be, or it may be changed, it will go from 0.45% to 0.3%. And from credit cards, the fees that the credit card issuer will get, if approved, will go from 1.3 to 0.6. But why is this so important to Fernando Chico? Because Banamex is, of all the big banks, is the most dependent on credit cards. It's the business that it's managed to hold on to very large market share. I think its market share is about 24%, which is much higher than its market share in any other product you care to name it. And of course, if this goes through, Banamex will adjust its business model. So these numbers are not correct in a literal sense. But if you assume that these fees go down as proposed, that this could slash Banamex's operating profits by 50%. Now, that won't happen by 50% because Banamex will reduce rewards and introduce higher annual fees and offset the cut in interchange. But it is very, very sensitive, Banamex, more so than other banks, to the interchange. And I wonder whether he's having sort of talks about Citi about adjusting the price he's paid if this does go through. But it's difficult things for him to do with Grupo Mexico still sort of on the sidelines, and maybe if he tries to renegotiate anything, Grupo Mexico might pounce. So my sense is that it's probably difficult to change the terms. This may not be considered material enough to change the terms, but it's certainly not good news for Banamex if it goes through and there's still the consultations to be assessed.
Yeah, I mean that we mentioned it last week that Banamex and BBVA were the two incumbent banks that will have the largest impact. Banamex, obviously, the most. I'm wondering whether already Chico Pardo, as he analyzed the bank, saw that would be a weak point that the bank needed to expand its products and businesses. It can happen overnight, so the impact will be severe no matter what. But I assume that he has also been thinking about not depending so much on these fees as other banks aren't, and that there are other opportunities elsewhere. But in the meantime, that's easier said than done. In the meantime, you definitely suffer from a decision or a regulatory change that was not in the pipeline, and nobody had talked about it, as far as I know.
Well, the COFECE put out a big report on the need for these fees to come down, and I think that the retailers, which effectively pay these fees, although in many cases, or if not in most cases, they pass them on to the end customer, are obviously kind of delighted that they're going to be paying, most likely going to be paying less card fees as the so-called MDA, the merchant discount rate, goes down to reflect the reduction in interchange to the issuer. But so there had been talk of it, but I don't think people expected it to come right now, and I don't think people, as you say, expected it to be declined, to be cut by such a significant fashion. Basically, we're going to European levels of interchange fees. The government is betting that will help promote the use of cards and the formalization of the economy. The banks are arguing that it'll make issuing cards less profitable, so they'll stop pushing card issuance, and therefore people will have less cards. So, and the retailers are saying, well, why should they subsidize financial, the issuance of cards? Why, if it costs a certain amount of money to issue a card, then the banks should just charge a fee. But cross subsidy with interchange, it doesn't make any logical sense. So there are arguments all over the place, but there's no question that this is a serious issue for the banks that issue a lot of cards like Banamex. So, Eduardo, moving on, did you have a chance to look at the GDP figures?
I did, and we saw a contraction in the Mexican economy, which I don't know if it surprised anyone, but at least in the second quarter we had rebounded a little bit, and now the Mexican economy is going down again. Economists' expectations have settled at a growth rate of around 0.5% for this year, which is a very minuscule growth rate, if you ask me. They've also lowered the growth rate for 2026. And I think the most important element of all this is that the investment numbers are coming at a very low end. Investment is not growing. And so that's a key component for future growth rates. Consumers are holding on, but nothing spectacular there. We saw remesas again a few days back, declining on a yearly basis, although in pesos they're still a bit higher, but slowing down rapidly every month. So it's an environment, it's not a very optimistic environment overall. What do you make of those numbers, Damian?
Yeah, I mean, it's clearly disappointing that GDP fell both quarter on quarter and year on year, and that was caused, as you say, by very weak investment. In August, I think it was down by 10% or so year on year, and that, of course, the whole idea of the Plan Mexico, announced by Sheinbaum and Ebrard and other members of the government, was to sort of boost investment in Mexico, and Mexico would kind of offset or replace China as a producer of many of these goods that the US wants. Well, in order for that to happen, there obviously has to be a pickup in investment, and it's not happening. So far, based on the official data out there, Plan Mexico is not working, despite all the headline announcements. The reality is people are not investing more than a year ago, actually less. Why, Eduardo? I mean, I think it's the usual suspects, right? It's the USMCA kind of uncertainty. Like, why would you put a few $1 billion into a car plant or car part plant when you don't know what's going to be the tariffs that you face? Judicial reform may be a factor. People might be saying, I don't know if there's a rule of law in Mexico. I'm not sure how big a factor it really is, because I'm not sure that people were investing a year ago or 2 years ago thinking there was a great rule of law. But so it's definitely cited by the experts as a factor. Some of the big AMLO public works projects have been sort of wound down. Dos Bocas, the Tren Maya. I mean, they're not over. Maybe they'll never be over, but they're clearly investing less, and that was sort of holding up investment a year and 2 years ago. And then, as you said, remittances, which are falling year on year, maybe because of Trump, maybe because of the U.S. economy, maybe a combination of the two things. So doesn't look great. Today, we're speaking on Thursday morning. The central bank in a few hours is going to announce its decision on interest rates. Almost everyone expects another 25 basis point cut. Headline inflation is behaving reasonably well. The economy is obviously weak, so it makes a lot of sense to bring rates down, especially as compared to most places in the world. Mexico's real interest rates at 4% or so are still very high. So there's lots of room to bring down rates, and the peso's obviously been very, very strong since the kind of initial uncertainty over Trump winning the election. We've seen the peso come all the way from sort of 21 to 18 and change. So maybe the cuts in interest rates will help investment over the medium term, but right now we're in a bit of an investment hole in Mexico.
Yeah, and there doesn't seem to be any catalyst to change that. The only thing that might do, which is the first reason you cited, is that the USMCA will be renegotiated in generally favorable terms for Mexico. We have to wait and see for that. But other than that, there doesn't seem to be anything that will be enticing enough to boost that investment number that is quite weak at the moment.
Well, maybe. I mean, to be a bit contrarian, the other number that's quite encouraging in an overall disappointing set of figures are exports. Exports are, believe it or not, growing at double-digit rates versus a year ago, despite all of the Trump tariffs on some Mexican goods and on certain specific sectors like aluminium and finished cars and copper products. Exports are growing well because Trump has been putting more tariffs on other countries, so Mexico's kind of become a preferred supplier. And there's actually a good piece in the New York Times sort of showing, they went through all the kind of data that's available in the US and showing that sort of Mexico and Canada are paying far lower tariffs than than other countries. So that can't continue forever without investment. I mean, at some point, these export plants are going to be at full capacity. So maybe if Mexico keeps on exporting, you're just going to have to invest to meet your orders.
I agree. I did a piece on my Substack about how so far so good the export sector of Mexico has been doing despite all the headwinds from Trump's tariffs. But yeah, it's not enough to take the economy out of its doldrums. And moving on that end, you saw something from the U.S. Chamber of Commerce regarding some key elements that they highlighted for the renegotiation of the USMCA, right?
Yeah, so as part of the USMCA review, the USTR, the trade authority in the US, sort of invites interested parties to make their comments. They open up a docket, and then you can file in that docket your concerns and your feedback and what you would like to happen. And as part of that, the U.S. Chamber of Commerce made public its filing, and it's a kind of wish list, whatever more or less whatever American company would like out of Mexico. And I would say in that wish list, many of the things, if not most, Mexican companies would also like rule of law. I don't think in the private sector, no one's going to be against that, nor theoretically, at least in the public sector, but to restore or protect regulators in competition, telecoms, energy. Well, we're not going to get that, but the government is claiming, even though they're part of the executive arm now, they're going to be independent and technical. And there's been some kind of encouraging signs with respect to the quality of the people in the telecoms area, and some good signs in energy. But and in competition, they unveiled the new members of the new competition commission, who seem quite qualified. But what we'll have to see is if they can stand up, if they have the political power and the courage to stand up to the executive arm when interests clash. A lot of focus on the tax issue, on the SAT, so-called SAT, the SAT. There were due process, reasonable deadlines, clear criteria, no retroactive penalties. I think everyone in the private sector will put a thumbs up to that one. And then quite a lot of concern about the SAT being able to block sort of e-commerce and writing platforms as a penalty for not complying with tax rules. And then quite a lot of concerns about the SAT having real-time access to customer data on these platforms. Energy neutrality, basically not favoring Pemex and CFE over private players, and making sure that permits and other issues that they need sorted out get done in a way that's not detrimental to their returns on investment. A lot on tech, a lot on customs, fewer paper forms, batch duty payments, and the government is, trying to crack down on contraband. There's obviously a trade-off between cracking down on contraband and making life impossible for legitimate importers. There's a fair amount of stuff in the Chamber of Commerce document on procurement and making sure that foreign suppliers are not shut out of procurement. I think many of them will probably be quite happy that they're not, that they don't have some of the liabilities to Pemex that local suppliers have, because Pemex hasn't been paying neither foreigners nor locals. And then telecom fees, spectrum charges that the US, which is probably AT&T in practical terms, say are too high and unfair for vis-a-vis the incumbent player. So it's a big laundry list. Now, I think the interesting question, Eduardo, is does Trump and therefore the U.S. administration, they care that much about this laundry list of concerns? I mean, what they want is U.S. companies to be able to export to Mexico. So, they might be quite focused on customs issues, but they don't necessarily care too much about whether U.S. companies are being poorly treated by the SAT or whether judges are behaving well or not, because Trump in the first administration actually removed investment protections in the USMCA to American companies, basically saying, I don't want you to invest in Mexico, so why would I encourage you to do so by giving you investment protections? I want you to invest in America. And if things go wrong in Mexico, it's your own fault. America first, and so on. So the Chamber of Commerce is obviously in all its right to and it's, and I'm sure its members have, want it to do this, to come up with this laundry list of things that Mexico needs to do to bring in U.S. investment. But I'm not sure that all of those things are high priorities for the Trump administration, which basically cares about things that move the dial on the trade balance, and move the dial on immigration, and move the dial on drugs trafficking. But if it's outside those three things, then maybe they're not going to be too focused on it. We'll see. But no doubt Mexico should do some of these things irrespective of pressure from the US, because as we've said, investment is declining, and some of these issues are the factors behind that decline in investment. So if they want to bring in investment, whether it's from the US or from Mexico, they should move ahead on many of these issues. But you may not find that Trump is the one that gets them to do it.
No, that is correct. I think so, as a matter of fact, some of the issues that you pointed out from the Chamber of Commerce are self-inflicted wounds sometimes, I think, by the Mexican government, and they are highlighting things that the Mexican government should correct or move back from where they were, because they're hurting the investment environment and hurting investment in the country. Yeah, in terms of Trump, that's a very complex mind to figure out. Well, it may be not too complex, but it's completely different from the premises under which many countries and companies operated before. He's a disruptor in many ways, and so you cannot expect him to behave in the rational or common way that we were used to. So while the U.S. commerce might want the U.S. to push in one way, Trump has another mind of his own in what he's trying to do and accomplish now. He suffered a big setback on Tuesday in terms of its elections. Will that change his behavior? Who knows?
Great, Eduardo. Should we move on to the interviews?
Let's go.
Today on the podcast, we welcome Octavio Camarena, CEO of KIO, a leading player in Mexico and North Latin America's data center and digital infrastructure space. Octavio joined KIO in 2013, became CEO a year or so ago, bringing in 20 more plus years of experience in IT services and software businesses. Under his leadership, KIO is driving major data center expansion, cloud services, connectivity across Mexico and North Latin America, having recently sold its Spanish business. The company's also undergone a huge transformation. It used to be very dependent on government contracts, retailers, some financial entities. It's now very geared to the big hyperscalers in data centers, such as AWS. I think only about 15% of revenues now come from the Mexican government, for example. So welcome, Octavio. Thank you very much for joining us today. How are you, Octavio?
How are you, Damian? Great. Nice to see you guys.
Likewise. Octavio is the CEO of KIO Networks, as many of you know, a leading player in Mexico's and Latin America's data center and digital infrastructure space. Octavio joined KIO, I think, in 2013, became CEO over a year ago, with more than 20 years of experience in IT services and related fields. And under Octavio's leadership, KIO is driving major data center expansion, cloud services, connectivity across Mexico, Latin America, Spain. Octavio, like me, did a master's in public policy from the Kennedy School at Harvard, and has a background in policy, technology, entrepreneurship. So, Octavio, why don't we kick off just with a little bit of information you're happy to share about KIO's footprint across Mexico, which is our main focus, and Latin America, Spain. And maybe also, so I just heard about it myself, tell us about your new product, storing data centers in space via, I guess, SpaceX.
Exactly. Thanks, everybody. I'm happy to be with you guys. Just quick comments. We got rid of the networks, and the name is now is KIO, period. No more KIO network. So I'm happy just to share that. It's just KIO as it is. And let me explain to you about where are we heading and what are our footprint right now in the world. We sold our Spanish presence there. So right now we're in 5 countries. We're in Mexico, Guatemala, Panama, Dominican Republic, and Colombia. And we're focused basically on LATAM since the acquisition. And maybe I should tell you guys why this change of strategy. The company was acquired 3.5 years ago by ASUR Capital, which is a private equity and infrastructure private equity fund, approximately 50 billion assets under management, that invests in infra. They invest in all type of infra, roads, ports, etc. And there's a specific component called digital infrastructure, and that's where they invest in data centers. This happened almost 3.5 years ago. Since the fund acquisition, ASUR's acquisition, there was a complete change of management, change of control. That's when I came as they were the ones that named me CEO, and the focus was really on Latin America. That's why we decided to sell the Spanish asset. So this happened, the sale of the Spanish asset happened a year and a half ago. So that's where we're based right now. We're primarily, and in Mexico, we're primarily in 3 main spots. One is obviously Mexico City. We're the first data center which have prime space in Mexico City. It's close to Santa Fe, in the back of Santa Fe. We have also premises in Tultitlán and in Toluca, close to Toluca, which we call those premises part of Mexico surroundings. We call it, they're the Mexico City and surrounding data centers. And then we have a huge hub in Querétaro. As you know, Querétaro right now is the Virginia of data centers in Mexico. And we were the first company to set foot in Querétaro with a data center in 2007. So obviously that's another very important spot for us. And then we have Monterrey also. So we also have data center in Monterrey, and we have other small edge data centers in other states. But the most important hubs, if I may say so, are Monterrey, Mexico, and surroundings, and Querétaro. So those are the 3 main hubs. We have almost close to 15 sites across the region. We have also, as I mentioned, Guatemala, Panama, Colombia, and Dominican Republic. And what's very interesting about this change in this new era of KIO is that, let me give you some numbers. Before the change of control, KIO was founded in 2001, 2002. So in almost 19 years or 20 years, in 21 years pretty much before the change of control, we grew. The way you size data centers is not by square meters, is by energy consumption. So we got to we had 19 megawatts of data centers in 22 years. We built 19 megawatts in 22 years. Since the acquisition, and that's in 3 years, we're going to close this year, we're close to 40 megawatts. So in essence, we doubled the company in 3 years what we had done in close to 20 years. That's how aggressive and that's the appetite that we see in the country, especially, and the appetite that our investors have on us and obviously on the country.
Fascinating. And going back to the question on this new initiative to store data in space that piqued my curiosity. Can you tell us a little bit about that, Octavio?
Of course I can. And we're very, very, very proud about this. There's a company called Lone Star. Lone Star is a company founded by Chris Todt. He's an aeronautical expert. He's been around he worked in many of the most important aeronautical companies in the world. And he decided to set this company almost 2 years ago or a year ago. The focus is to have storage in space, which is the ultimate, more secure location to store data for several reasons. One is not only something that has to do with hacking and security per se, which obviously is a lot more secure in this space, but also has to do with sovereignty. Many times, many clients get hacked or their security gets hacked. They're always looking at where they put their data. And now more than ever, if you leave your data and you put it in a specific country, that country gets sovereignty on that data. And it's getting more and more complex. So many, especially for this venture, this is really focused on government clients. This is this new venture. The market is those governments, and it's aimed at those mission critical data that they really, really want to take care of. So when these governments actually came to Chris And they say, look, we have this problem. We don't know where to put the data. We literally don't know where to put it. Because if we put it in this space, we lose sovereignty. If we put it in this other country, we can lose sovereignty. If we put it here, we're not comfortable. So find a way, and space came to the forefront. And as a matter of fact, this is something that I have learned. The space is highly regulated, super regulated. And what's interesting is if you bring data to space, the satellite that brings it up has a flag, say it's an American flag or whatever flag. But whatever is inside the space, inside the satellite, the storage per se, you can compartmentalize the storage. And whoever is the owner of the data, that defines the sovereignty of that spot in space. So this really clears the threshold, because the sovereignty in space is of the owner of the data. So in that sense, the governments were really, the ones that approached Chris at the time, they were super satisfied that this would be the solution to their problem on the sovereign side. And also there's another addition. This project, the way it's been visualized is the satellites are not going to be where all the satellites, the Elon Musk satellites are, which are very close to Earth. They're between 3,000 and 10,000 kilometers from Earth. This satellite is going to be 300,000 kilometers. It's going to be very close to the moon. From Earth to the moon is 400,000 kilometers. So this is almost 3/4 closer to the moon in a space called Lagrange. And this is a spot where there is no gravity attracting the satellite to Earth or attracting the gravity to the moon. It's like latent. It's completely latent there. So we're putting Chris is putting the satellites there. And also the distance to Earth we have what you call latency. So this is not really for transactional processes, it's for storage. So you're not going to be transacting up and go. Doesn't make sense. It's not for that. This is for storing critical data. And the latency is 1 second up, 1 second down. So you can get is that a lot or is that fast or slow? For technical reasons, that's very slow. But it's perfect for this, because all the hacking, they need to do for hacking, you need a lot of speed. So when you're too far away, this latency kills the hacking attempts, because you need speed to get to hack. So you need milliseconds. So the farther away, this processing, the typical methodologies that the hackers use don't work with low latency. So it's a second secure protocol. And finally, the way this is structured, the project is structured, is everything is encrypted. KIO is going to be, and let me just I have many things in my head about this project because I'm very excited about it, but just to walk you through it. There's going to be 3 ground stations for the satellites across the Earth. One is going to be in Australia, and that's going to take care of that part of the Earth, which is Southeast Asia, Oceania, etc. Then there's going to be another ground station in Europe, in London. That's going to take care of that part of Europe, Africa, etc. And the other ground station is going to be for North and South and for Americas. And that's going to be KIO. And Lone Star really, they were searched, they went around and they visited plenty of data centers across Americas. And we are super humbled and honored that they chose KIO. We had specific, obviously, geographical conditions that are perfect, but they were super, and I don't want to be egotistically, but they were super impressed with the technical and the excellence of the way we handle data centers in the country. So they chose us above all the other competitors in the Americas.
So that brings me, Octavio, to my next question, which was KIO's competitive advantages. I mean, presumably based in Mexico, even with a Canadian private equity controlling shareholder, you have a higher cost of capital, probably have higher energy costs, and you probably have less kind of post PhDs from Stanford or MIT working on your staff than some of the US data center companies. So what are the sources of KIO's competitive advantages? Why are you comfortable that you're going to continue to thrive over the next decade in the way you have done well over the past years?
Well, in Mexico and in North Latam, we're really focusing, and we're strategic about this thing, because that's exactly why we sold Europe. We don't pretend to be expanding everywhere. That doesn't really make sense. other than this specific project on space, which is very pinpoint, and we're really is a JV with Lone Star, and they picked us. Really, they were the ones that approached us. So we definitely liked the project, and we jumped in. But coming back to the Earth data centers, our focus is LATAM, and to be more specific, North LATAM. We want to really understand and cover the market in North LATAM. Why are we special in many ways? We're one of the few, probably the only data center that understands the three markets. In data centers, you have the retail sector, and then you have what you call wholesale and hyperscaler, which is when you service the Amazons of this world or the Microsofts of this world, etc. Before there were only retail, you didn't have any hyperscalers, etc. So that's when KIO was born. So we have a very good and strong ecosystem within our data centers. For example, the two Mexican stock exchanges are hosted at our data centers. And once you host the two Mexican stock exchanges, guess who wants to be around them? All the brokerage house, because there's latency. So we really have a super huge financial ecosystem on several of our data centers. And this brings value to the companies because they want to be closer together. One of the main values that you get by being closer together is that you save a lot of money on communications. Let me give you an example. There's imagine in this rack, I have the Mexican stock exchange. So in a different rack, you had a brokerage firm, whatever you want to call it, GBM or one of them. Before, if GBM wanted to contact the Mexican stock exchange, they had to have literally fiber. Go in a direct fiber up, go to the web and come and join them. When they found out they were completely in the same data center, we have something called cross connects. So I go and put literally a cable, a direct cable that goes from the brokerage firm to the stock brokerage house. And we bypass, they don't have to go to a carrier. So in essence, they really save a lot of money by avoiding going to a carrier and going up and then returning to the data center because it's cheaper and it's safer because it's right there within it. So it's in a safe premises. So building these ecosystems bring a lot of economies of scale to the people that are part of the ecosystem. And we have ecosystems not only on finance, which is very strong. We have ecosystems in retail and other sectors. And that's on the retail side. That's very unique. And for that, why did we get these ecosystems? First mover advantage, because we're the first to be here. So obviously, and it's very sticky and very hard for companies to move out. If you want to migrate, this is not like changing a mobile company from one mobile to the other. You have to take the racks, get infrastructure, set up migration. It's really a hassle to move your stuff from one data center to the other. So building these strong ecosystems is critical on the retail side. And we're also successful on the hyperscale side because we also have clients. And one of the biggest clients that we have been signing recently are all hyperscalers. The big names, the big US names, you name one, all of them live at KIO. Some sort of instances lives in KIO. So if you go, for example, and you get into, AWS to name a few, you would think you would be on their sites all the way up in Virginia. All of them are already local. You'll be hosted at KIO. So we do host the major hyperscalers, Asian and American, because there's a huge Asian push coming to Mexico. And we're being able to be successful in deploying capital to grow on both sectors, retail and wholesale. And you very seldom see that in any country. You have data centers specialized on hyperscalers or the ones historically that started with retail that they stayed there. So I would think we have proven ourselves. And this was part of the attractiveness of us being acquired by the fund because they understood we did this very well. And then the latest track record of deploying capital has been I would believe it's super successful by literally doubling the size of the company in 3 years, what we have deployed in almost 21 years.
So Octavio, in that sense, you just described a little bit of some of the competitive advantages that you have, but it's very impressive what you just told us, that you are the North American ground service for these space storage. So you defeated in the contest that I think Lone Star probably started within its own company, many other US and Southern American companies. That's quite something that has not been advertised in Mexico as despite the fact that you have foreign capital within you, you are a Mexican company.
Absolutely.
And what else can you tell us that made you this one of the three pillars of this space age storage system that is blowing my mind, if you ask me?
Yeah, it's this is really a question for Chris, and yesterday when we were talking to Lankenau, Chris answered that question, and I mean it's not up to me to say it. I don't know who they visited. I know they visited us because when they contact us, they came to me, and when I heard this, I was like, "What the hell who's this guy? What's he talking about?" I was the first one perplexed was myself, because it came from my COO that brought this idea because they found Chris in a forum in a seminar out of Mexico. I think it was in Las Vegas, where I don't know where it was, and I was the first one that was very hesitant about this. So they kept insisting that they wanted to visit us. So they said, "Yeah, fine, come." So they came to Mexico with a group of engineers. I think the founder came with the president, and they went and visit many of our sites. And I decided, okay, you want to? Obviously, I made sure they follow all the protocols. We're very, very highly. We have strong methodologies on who can come into our data centers and what can they see, what cannot they see. So I was very thorough about it. And to my surprise, these guys were pretty impressed. So they came back, and a month passed by, and they say, "Hey, we really would like to continue talking to you guys." And I said, "Fine." And they said, "Look, we think you're the best place for us to set the ground station for a project. And we visited many of your competitors in the region. Are you interested?" So there I really started paying attention and say, okay, what does this mean? Because we have to make investments, obviously, to create the antennas that broadcast the data to the satellites. So we started with these discussions, and we have a bunch of NDAs that I cannot really tell you more. But at the end of the day, they said, yes, we really wanted to do it with you guys. Would you satisfy absolutely all our requirements? Your technical expertise is top notch, and they were pretty much impressed by the people. As a matter of fact, we sense you're not going to be treating anybody like a number, but you are devoted to excellence and customer care or customer service, whatever you want to call it. They emphasized a lot about, because I didn't know this, but they talked to a lot of my clients. They did like a mystery shopper.
Their work.
A mystery shopper. Later, I found out that they talked to many of our clients, and at the end, they decided to come with us. So maybe at some point in time, I would love if you can ask the same question to them more than to me. Why did they pick us?
Octavio, and getting a little bit back to earth, if I might say so. I mean, data centers have become strategically crucial for the digitalized world. We've heard and we've covered in this podcast some of the challenges the data centers are facing in Mexico in terms of energy, water, etc. What can you tell us that KIO is doing to have the energy, the water, all the resources that are necessary, and how do you feel the Mexican environment ecosystem, including the government, is doing to help you out become or continue growing in that sense?
You're absolutely right. There's a lot of challenges in Mexico, and obviously one of them is energy. You have to be clear, completely clear. I believe there's definitely a need for more energy. Investments at the state level, sector level were not made for many years. But I am very more positive with the current administration. I would like to stress that. I believe we are sensing a change in winds with the current administration, and they understand that energy is critical, not only for data centers, for the concept, for the nearshoring manufacturing concept as a whole. And I believe they're understanding this more and more. In coming back to the what we're doing about the energetic and efficiency needs. Regarding water, I would like to stress that there's two different types of cooling systems. So there's some cooling systems that use a lot of water. You're completely right. They're called adiabatic systems. KIO uses zero adiabatic systems. We don't waste water. These are closed circuits. We use what you call chillers. and what you call closed loop chillers. So all the water, and this is not, it's not really water, it's a liquid, it's a special liquid that literally cools a serpentine that keeps going up and up, but it never leaves the circuit. It's a closed circuit. So our systems, our cooling systems, are what you call closed loop cooling systems that we don't waste water. So as opposed to other technologies, KIO is using this standard since the beginning. So we don't really are very, very efficient on the water usage. On the energy usage, we have right now close to, we have the correct number right now. Where is it? I believe 79%. It's 79, right? 79% of the energy that we consume comes from hydro. We have a PPA with one of the main players, and it's hydro. And we're completely focused on bringing as much green energy as possible. And we believe, and part of our reports, quarterly reports to the fund, we have a very strong ESG committee, and we measure. Are you aware about the greenhouse gas global protocol? Well, we follow the protocol very, very thoroughly, and we have to measure emissions on what you call scope 1, 2, and 3. Scope 1 is what it's the emissions that are directly produced by yourself. That's what you call scope 1. Scope 2 are the ones that are emissions produced by yourselves and by your suppliers. And source scope 3 even goes further out. It's really the entire supply chain, the emissions that are produced on your entire supply chains that get to you. So we have to measure those emissions, and we try to be as strict about measuring this as possible. And we try to have benchmarks of trying to reduce this scope through time. So right now, the first things that I can tell you is that we track this very thoroughly. This is something that came from the fund. Before we were not as focused as we are right now. And 87% of the energy that we consume is hydro. So we would love to, if it's more, but the problem with Mexico is that there's not enough energy. There's not enough hydro energy. So if there were more, we would probably consume it.
And how is the competitive landscape for data centers in Mexico or in all the countries where you are based, Octavio?
In Mexico, we're seeing a strong presence of what you call the Brazil. They're really US data centers that bought Brazilian players, but this is really the big guys. For example, Align Data Center bought Odata, which is a Brazilian data center, and they are in Mexico. So, but the names that you see here, you don't see Align, you see Odata, which is the Brazilian brand. But we know they're the US data centers. But we have we have three specific players. They all tailor. They really focus on the hyperscale clients. So they're more focused on the other hyperscale markets, not on the retail side. And we are seeing more of those coming in. There's I would say Scala, Senti, Odata. The major ones, all of the ones I just mentioned are Brazilian. But we foresee that coming in. I mean, I don't think that's going to stop. But at the end of the day, it's going to be very companies that are, at the end of the day, with U.S. capital, either already bought by U.S. data centers or others, the ones that are going to be concentrating in Mexico.
So I think Cloud HQ just announced a 4.8 billion investment. Will they be your client? Will they compete with you for certain clients? Or explain how your relationship works with a Cloud HQ or similar types of companies?
Yeah, no, at the end of the day, probably there will be competition because they are going to be building infrastructure really much focused on AI. And we can pivot here to the AI things. Everything that I have mentioned to you are not AI data centers. These are what you call cloud environments, cloud IT environments, non-AI. In Mexico, and I would probably say that in LATAM to date, there's no AI data center up and running. A serious one maybe doesn't exist. No one has it. All the AI data centers right now are pretty much in the US and in China, the major ones. And when you talk about AI data centers, you have two type of AI data centers. Where you do training, where you train the models, and where you do inference. Inference is the usage of the models, which is something different. So first, obviously, all the data centers were training these huge amounts of data for training. And then you have, once the model is mature and all the applications that use the model are mature, you have the inference. So neither of those are in LATAM, I would say. Neither of those. We're planning, and we hope to be we are already talking with a hyperscale client, and we would like to have the first AI data center in the country. But volume size, just to give you an example, right now we're going to close to 40 megawatts, okay? In 20-something years. One AI data center, it's 150 megawatts or more. And they can be 1 giga. That's how big they are. It's completely a different scale. And this implies deployment of capital. So here you're not talking about hundreds of millions of dollars investment. You're talking about billions, above 1 billion. It's another completely another ballgame. And we would like to be the first ones with a real Cloud HQ. Is going to be pretty much, we believe it. What I've learned about what they do, because they did something similar in Brazil, is that they launch these massive announcements. They have right now, they have the land. They're going to start constructing this thing without an anchor client. And eventually they're going to bring probably one of the hyperscalers for AI into the country. These massive amounts are pretty much focused on AI, not on the typical clouds.
But they presumably they will be for the inference, for the day-to-day running of AI.
Absolutely. I would say most of the training, it's being done in China and in the US. And all the AI, and there might be exceptions because some countries wants to build their own sovereign AI in the country. So they would like to train some models. Probably some, but most of the AIs would probably be for inference. You're right, Damian. Not for training.
I mean, does it make a lot of sense for Mexico to have its own, massive data centers when energy costs are much lower in the US and other infrastructure is, generally speaking, higher quality? And we're obviously next to the US, so the transmission or latency costs are probably lower than for other countries. Does it make any sense for Mexico to kind of import natural gas from the US and then use that gas to fire electricity and then use that electricity to build these massive data centers? Can't we just rely on the US?
No, at the end, the same question was asked with cloud 10 years ago. Does it make sense for Google to set a cloud region in Mexico and not just service from Virginia? Is exactly the same question was asked. And the answer is they serve you from abroad. But as the eyeballs start growing, latency is very critical. And you want to be closer to the eyeballs. And then there was a justification to start coming closer to the eyeballs. And with latency and with inference, it's going to be the same. I believe it's going to be the same result. And they want to be closer and closer to the applications that are going to be using these LLMs. The LLMs are not going to be developed in Mexico. The LLMs are going to be developed in China and in the US. But the applications of the LLMs, there's huge industry that is building around building the applications that use LLMs for a more fine-tuned product for the health sector, for the finance sector. You want those to be closer to the clients. So I believe at the end of the day, it makes sense. And it's really more of a latency and tropicalization issue by being closer to the market. The same question that you asked, Damian, was asked with the cloud before. And you have all the cloud regions in the major, not in every country, obviously, but in Mexico for sure, in Brazil for sure. They're going to be like the major markets, they land there. And I foresee that happening here. As a matter of fact, the client that I am starting to have contact with for AI inference, obviously they are in a different country. And they're already saying, look, in our strategy, there's 3 countries where we're going to set foot. One is Mexico. The other one is the obvious, Brazil. And there's a third one that they're thinking about where to put it. But the answer to you, not coming from me, but from these guys, is yes. At least on those 2 markets, we want to be.
And these guys are going to have to put most of the money up because KIO doesn't have the balance sheet to build a $100 billion data center.
I don't see we're gonna have $100 billion a day, because that's at the 1 gigas. But I do believe we could have 100 mega data centers, and the balance sheet for $1 billion probably we could, with a fund behind us, we could. But remember, we build the infrastructure, the chips, which is the other big part of the investment that comes from the client. You see what I'm saying? It's like we build the infrastructure, we build the buildings and all the cooling systems for it. But the actual chips, which is another significant portion of the investment, that's really something that the client puts. They buy that. See what I'm saying?
No, totally got. So just to finish off, Octavio, do you think that based on public government policy, energy availability, capital availability, Mexico is reasonably well placed to benefit from the AI revolution that in turn is going to fuel the robotics revolution? Are you, as a Mexican, are you reasonably comfortable that we're going to stay ahead in this fierce fight for AI resources?
I think the most important part of Mexico is the size of the market. What's important about Mexico is the size of the market and the technical usage of the Mexican market. It's not as behind as many people would think, and that's the most important asset. That doesn't mean we don't have a huge challenge in energy, as I said. I mean, there's huge investments have to be done in energy to have the right sources of energy that will be demanded. And also the cost of capital. The cost of capital in Mexico is obviously not the cost of capital of other regions. Obviously, those things are challenges. However, the market and the size of the market, and the companies that come to Mexico, they don't serve only the Mexican market. They're gonna serve from Mexico. They want to service North Latam, NOLA, and then they're going to settle in Brazil to serve Brazil, Chile, Argentina. They're going to be like 3 hubs, maybe 2, and I do think Mexico is going to be one of them, definitely. And it's not that I think about it. We're already talking to these guys, and they really want us to get closer to the eyeballs. And the Mexican in Latam, as a matter of fact, usage of AI per capita is larger than many usage per capita in developed countries. You would be amazed about the usage of AI applications in Latam. It's not as backwards as many people think. So I do believe that the biggest advantage of this region is the size of the market and that usage that Latins are doing with this. We can leapfrog many of the well-advanced economies in this sense. Again, challenges, yes, in energy, and yes, cost of capital, of course. I mean, the numbers are there. I mean, I don't want to state the obvious.
Octavio, that was a fascinating conversation, one of the most interesting we've had today. Thank you so much for sharing that with us.
Great.
Thank you, Octavio. Brilliant.
Thank you. Take care. See you.
This week on Mex Moves, we're joined by Fabrice Chemouni, Head of International Distribution and Natixis Investment Managers, and Mauricio Giordano, Natixis Country Manager for Mexico. Fabrice and Mauricio, thank you for being here with us.
Thank you for having us. Thank you, Eduardo. It's a pleasure being with you guys.
Great. As many of our listeners may know, Natixis Investment Managers is one of the largest asset managers in the world, with more than $1.5 trillion in assets under management. The company is headquartered in Paris and Boston and forms part of the global financial division of Group BPCE, France's second largest banking group, and the parent company of Banque Populaire and Caisse d'Épargne. I hope I pronounced that correctly. This year, Natixis is also celebrating 10 years of presence in Mexico. Fabrice and Mauricio, once again, thank you for joining us. And let me start by asking, how does Mexico fall in Natixis' global strategy, and how has Natixis' view of Mexico evolved over the past decade?
Thank you very much, Eduardo, for having us on your podcast today. First of all, we're celebrating 10-year anniversary of Mexico for Natixis, and let me tell you, we are very happy and very excited to pursue the venture here. Why? It has been a wonderful ride. Actually, we opened the office 10 years ago for one purpose, to accompany the pension system that was growing in Mexico and servicing the best way. You mentioned that Natixis is managing roughly 1.5 trillion of assets. A significant portion of this AUM is dedicated to pension. We have been accompanying pension plans around the world for decades, and this has been a bread and butter for most of our affiliates since we started the model, actually. During the 10 years that we spent through, actually, many things happened, and 2 important trends happened. the growth of passive investments, essentially from ETFs. And on the opposite side, the growth of private asset investments, thanks, or I would say because of the banking system, allowing more asset managers to grow in the private asset space. We at Natixis, we are evolving exactly in the middle. We are not doing passive. We are doing a significant portion now of private assets, but not in Mexico for regulation purposes. But what we do well is conviction management. We're calling it active. I would call it conviction management. Concretely speaking, we have introduced affiliates of Natixis, such as Mirova, such as Loomis. And I have to say, our clients are very happy about the journey they have made with us over the last decade. So not only we are happy, but we are more than excited to pursue the venture.
Now, you mentioned, Fabrice, the pensions as a key element in your services. So the fact of the matter is that you almost not necessarily coincided with the Afores coming up, but the fact that the Afores open to foreign investment, does that coincide with your arrival in Mexico?
I mean, it was exactly at the right moment, and we took advantage of it to introduce our model and to explain the way we could support the Afores going forward.
Yeah, definitely. And of course, most of what we've done is on the equity side. You know that on the fixed income side, it's always been difficult in Mexico due to the higher rates, the higher level of interest rates. But on the equity side, we've been able to bring very successful strategies, very big strategies to which have access the biggest players in the world, and being able to bring them to Mexico. And at the end, the employees that are part of this Afores being able to buy these huge strategies, it's a great proud of us. So we're very happy with this.
And in that sense, Fabrice mentioned at the beginning that the passive investment or the ETFs has, I don't know if it has probably taken away part of the business that you were providing the pensions, or has it not influenced the overall strategy of Natixis in Mexico, or you haven't seen a competitive element in that sense?
The explanation of the growth of ETF is essentially based on the fact that many active managers were not able to beat the indices over time. So when you add the fact that in the US, the ETF benefited from a very specific tax framework, that was a huge, I would say, trigger for growing that industry. The situation is different in Mexico. The situation is different in Europe. I'm going to come back in Mexico in a minute. But in Europe, for instance, active ETFs are growing. Don't get me wrong. This is a trend. But it is not growing the same way as it has grown in the US because we don't have this tax framework. But as a matter of fact, investors are willing to pay less for having the same results. So it's our job, asset managers, to convince that if you want to outperform the indices, you need to perform. And if I'm looking what we have developed in Mexico, the customers we won 10 years ago are still with us today. It means a lot. It means we were able to deliver not only the performance we were expecting, but overperformance. So it is very important. But having said that, we also need to respect the trends. And I can give you a scoop. We're going to bring active ETF in the Mexican market in the future because this is a vehicle that is also needed by investors.
Yeah, and I would just add there, Eduardo, because there's always this discussion between active and passive, and people tend to look at trends and tend to look at averages. And I mean, just as an example, in the case of U.S. equities, I get this a lot. So people say, well, on average, active managers do not beat the indices. And my answer to these people is, then why are you looking at the average? I mean, if there's an average, there's, of course, people that are doing a lot better. And that's where you need to focus, because that's where a strong philosophy, a strong process and discipline allows us and for our clients to stay invested and to take advantage of the market biases and the fear and greed that happens in the markets that allow us to overperform in time. But for that, you need to be patient. You need to have a long-term view. And if you can stick with us in time, that as Fabrice was mentioning, you get great results. So I think that's super important.
So the average is the average, but you guys are above the average.
Of course.
Let's say it this way.
Of course.
And Fabrice, in what you were talking about, the world and all the countries where you participate, and maybe, I don't know if this is more for Mauricio, since you're the head of international strategy or distribution, how does Mexico look from a world perspective? What's the outlook that you see within Mexico? I know the stock market has been doing tremendously well this year, but what's the Natixis take on Mexico versus the world?
Okay, and I'll jump there in first, and let's see if Fabrice would like to add something. But Eduardo, what happens, and it happens in every country when you're living in the country. So we tend to see at all the things that are happening internally, and we get worried. When you look at Mexico from the outside, and this is something that comes out in every conversation when I'm outside Mexico, you see that the numbers are balanced in some way. Growth has not been marvelous, but it's not terrible. We're not losing, and it's stable. And compared to other regions, we look fine. And we shouldn't forget that Mexico is a growing promise in terms of the demographic bonus that we still have, okay? And this is something that will allow us to keep growing. So it's definitely a market that is essential in the strategy and that Natixis is definitely looking at.
No, I absolutely agree with that. I mean, the demographic in Mexico is exactly the opposite of what we see in other markets. If I'm looking at Europe, for instance, if I'm looking at Asia, the demographic is now playing favorably. That's why managing pension system in a very soft way and managing the liabilities the best way is very important. We don't have the same issue in Mexico, and this is why we are seeing more investment into equities in Mexico comparing to what we see, for instance, in Japan, that is very, very invested in fixed income, for instance. I mean, the characteristics of the country are very different here in Mexico comparing to what we see in other parts of the world. So this is why it's very important for us to be local. I'm really insisting on that. Many managers, they think they can deploy strategies in different countries far away, from New York, from London, whatever. We at Natixis, we made one choice. Local offices with local people who knows the market, who knows the client, and able to adapt the solution that fits the client needs. It's very, very important.
So in one sense, you see a potential growth in Mexico because the population is still young, the pension system is growing tremendously. Fabrice, in that sense, the other way around, do you see people abroad interested in Mexican assets?
This is not something I heard, to be completely fair with you, but Mexico is a highly regarded country. We can hear that from many, many investors, and we are trying to attract customers who have more attention more broadly to Latin America. I have to say the recent election of the US president put us a lot of light on Mexico, and people started to be interested in Mexico's and in different industries and whatsoever. Today, we don't have production, I would say, in Mexico as an asset manager, but this is something we could probably think about in the future.
And this is something, if I may add something, Eduardo, there. Of course, it depends, because if you remember Natixis, we have all the affiliates below us, okay? And they have different strategies. So definitely Mexico is part of the emerging market strategies. But then when you look at benchmarks, and this is something very important, Mexico, it's very, very small in a benchmark. So if you consider that from a global point of view at Natixis, our investors are very large, but are outside Mexico and are following international global benchmarks, then the proportion to that can be invested in Mexico would not be that large. But we're definitely invested here. And another example is we're about to announce, for example, an investment from Mirova, okay, that they just landed a deal with a local transition energy company, okay? And these kind of deals are happening. So definitely there's presence of Natixis in Mexico, and we'll continue moving that way.
Yeah, you touch upon a subject that is quite interesting and relevant in Mexico, I think, Mauricio, in the sense that Mexico needs a lot of investment in infrastructure, in energy, in many areas of the economy for what is a great place in the world to service the U.S. or other countries in an area of influence of Mexico. Are you guys ready to advise on these projects, or ready to help the Afores decide whether to invest or not in certain projects that might come up in the future regarding these infrastructure projects?
Definitely, we're close. Okay, we have capabilities, of course, in private markets, and we have very important companies like Flexstone in terms of private assets. We have in terms of infrastructure, Mirova, an important player in this specific field, and this is of course something that we're close to Afores. We're talking to them. We found that. And if you look at how the market has developed, the Afores have been investing a lot with very large players, okay? And there's a lot of investment there. I think they will be moving slowly to niche and to smaller players that can deliver different things or higher returns with less risk. And this is kind of the things that we can offer. And so definitely we're close to them, and we're very happy to be close to institutional investors, definitely.
And in sense of growth, Fabrice, Mexico is growing, like you said, not extraordinarily, but it's growing, or Mauricio said that, sorry. I'm Mexican and I'm sometimes frustrated. I think Mexico could grow at a faster pace if it did things correctly. But what's your international view on the Mexican economy and its growth prospects?
Not a specialist, to be honest. I'm living far away from it, but what I like in Mexico is exactly what you said. It is growing. You have a good demographic, and the growth of GDP is quite significant. If we are comparing, not to the US, but if we're comparing to Europe. If you look at the situation of Europe, for instance, the growth of the GDP is very slow and small. We are facing huge deficits, and the demography is not playing in the right direction. So this is why, focusing on countries like Mexico is quite important for us. You are mentioning a lot since the beginning of the call, Afores and pension, but don't forget as well, we started to talk to wealth managers at the same time. There is a growth of wealth in Mexico, and needs has to be addressed. We already approached some distribution network. I don't know if you can give any name, but it's probably not the case, but I don't know. But today we have a good beginning of penetration on the wholesale space in order to service these clients in Mexico. So again, not only we are happy to have the Mexican office, but we are more than happy to continue developing the Mexican market because of its fundamentals.
Yeah, and I would add there, and the local asset managers that we're servicing, there are very important names like Santander or Valmex, where we really help them to fill the gap in some of their strategies, and really, again, to us, it really makes me proud to be able to bring one of the best strategies in the world to Mexico through these guys, and this is fantastic.
My final question is: how is the competition on your industry going on with other foreigners and local companies providing similar or other strategies?
What competition?
Who do you mean?
No. With a lot of respect for competition,
yes.
It's been a challenging market, of course. We were talking about the potential growth of the Afores with the changes. I think that has been slower than we've envisioned in Advantage. But being close is our business, and being close is what we do. Okay, and patience pays. And I think this is what we need to do, and we need to be here. And I'm sure, we were saying the other day that we had our event commemorating our 10-year anniversary. People were approaching me and say, congratulations. And I say, well, it's been a fantastic ride. I look forward to the next 10 years. People say, well, Mauricio, good luck on the next 20 years. I say, well, I'm not sure I'm going to be here on the next 20 years. But thank you very much. We're really looking forward to the future, and it'll be exciting and what it can bring.
Absolutely. And Mauricio is right. Competition is important, and competition is good. That's the best benchmark you can have. Having said that, you probably noticed that the cost of doing business for asset managers is increasing dramatically. Regulation, different stuff are making this cost of doing business much more important. The beauty of Natixis, again, is our model. Because when you're talking to competitors that are fully integrated, at the end of the day, they have to make choices. They cannot be good in every single field. We at Natixis, we have our affiliates. They are operating in their lines, and they are trying to perform the best way in their specific lines. And this is what clients like. I think we have a huge competitive advantage if we are able to deliver alpha. This is where clients are expecting us. And so far, I think we are doing pretty well.
Well, I think we've covered all the topics. I hope we don't need to have 10 years to pass by for us to talk again. We hope we can have you again in our podcast the next time you visit Mexico, Fabrice, and Giordano, you're always welcome. So thank you both for your time and patience.
Muchas gracias.
Muchas gracias, Eduardo. Thank you very much.
Thank you.
Thank you for
That's
your
good.
time. Okay, great talking to you.
Fantastic.
Bye-bye.
Well, thank you for joining Mex Moves. Very much hope that you leave a comment and rate us and come back next week. Thank you very much.